It's 5 minutes after 8. Good morning again. Welcome to this special broadcast of the Governor's annual monetary policy statement. We are expecting a live stream where we give you the live update of the Governor himself delivering his address at the Central Bank complex at Eswatini. And we do have Nelsiwe deployed there. She's our business journalist. She'll be roaming around interviewing the right people there, getting reactions, and also preluding what is going to be happening. So we'll be giving you that special broadcast, myself and Lungelele.
Yeah, very good morning once again. Thank you for tuning in. This is the special broadcast of Market View. As Sfiso said, we do have our business journalists down there at the Central Bank Eswatini complex, and also in Langamandla. I think we're crossing over there to her now as she's just waiting for our prompt. And a very good morning and welcome to this special broadcast of Market View. This year's monetary policy is significant indeed. What is happening at this moment?
All right, that was Nelsiwe Ndlangamandla. We can see that she is on standby with the EU representative. That's the European Union, and I suppose that is who she plans to give us an update with to begin the show. But at least we understand now we're just sorting out a few sound issues with regards to our communication with her. It seems as though she cannot really get what we are saying to her. And so while we fix that, we do just want to remind you that what we expect today is that, of course, the Dr. Philip Nisi, the governor of the Central Bank of Eswatini, sort of, premises his speech by, understanding what has been happening in terms of the economic trajectory, not only of Eswatini, but of the region as well as of the globe, taking stock of everything that has been happening to recalibrate the economy of Eswatini, as it were. Now, we are aware of the raising interest rates that are in sync with the regional pressures that he has been quite, open about in a lot of our interviews that we've had with him here on our Market View edition during 2 p.m. Central African time, where we normally decipher these issues. So we really do want to understand, prioritizing the exchange rate with the stability and safeguarding the value of the Langeni, some of the things that we'll get. But we understand that Nelsiwe is now ready to give us this prelude of what is happening down there, as well as interviews. Nelly, what is happening there? What is the update right now?
Thank you so much, Sifiso, and good morning to the viewer at home. The governor is here. Everything is set to go. We are now joined by the CEO of the Eswatini Sugar Association, Banele Nyamane, who will just give us his insights and what he thinks this address will entail. Good morning, CEO. What are your expectations of this address by the governor?
On behalf of the sugar industry, our expectation is just to understand the monetary policy that will be followed by the central bank in the coming 12 months. Where that is important for us is it enables our members to understand in terms of what will be their expectations on things like inflation, interest rates, that will then make them plan for their business adequately.
So with the geo-economic tensions that are currently ongoing around the world, what is the outlook that you think the governor would share, basically the economic outlook?
Our key interest will be on the inflation projections, and also on the foreign exchange expectations, because those are the major drivers in our industry.
Over the past year, we know that the governor is going to talk about how the country has performed. As the Eswatini Sugar Association, what do you think about the country's economic monetary stance? How has the country performed in that regard in the economic monetary policy stance?
In my view, the country has performed really, really well. There has been some stability in terms of foreign currency. There's been very big improvements in terms of inflation. We are expecting that the governor and the central bank will proceed in terms of maintaining a predictable economic monetary policy.
Thank you so much, CEO, for joining us this morning on Gusile Breakfast Show. That was the CEO of the Eswatini Sugar Association, basically sharing his insights on what he expects from the governor's monetary policy address. We are expecting the governor to talk a bit about the new innovations that are coming in the financial sector. We are expecting the governor to also touch on the financial stability of the country and how the central bank has performed in this past year. We also want to know the forecast because of the trade wars, because of the geo-economic tensions that have been going on around the world. So we are looking forward to seeing what the governor is going to say, giving directions, as we know that the central bank plays the supervisory role, especially to the banking sector and non-banking financial institutions. So the proceedings are already ongoing inside. We are waiting for the big speech. We are waiting for the big address by the Central Bank of Eswatini as it shares its performance, where the bank will tell us how it has performed in terms of ensuring that they take accountability for every action that they have done in the past year, ensuring that they steer the country financially, economically in the right direction. We know that this address is mainly to ensure that the central bank shows that it is accountable, it is working in a transparent manner. So we will shortly listen to the governor. I want to implore the viewer at home to make sure that they watch Market View today at 2 p.m. because that is when they will see the full speech of the governor. That is when they will know how the country will perform, especially in the economic front. Back to the studio.
Right, that was business journalist Nelsiwe and Langamandla just interviewed the CEO, Mr. Nyamane Sugar Association, Mr. Nyamane. Still waiting for the governor's address on the annual monetary policy statement. I think as of 2024, the Central Bank of Eswatini projected that Eswatini's inflation rate would be 4.9% in 2025. For yet to hear what the governor's address will be this morning is so this was a downward revision from the previous forecast of 5.0%. We want to hear his projections this morning. We're going back to Nelsiwe. We're going back to the event. The governor is about to speak.
The seventh governor of the Central Bank of Eswatini, Dr. Phil Mnisi, to deliver his monetary policy statement. Governor. And I thank you.
Thank you. Siyabonga. Program Director, the Deputy Governor, Honorable Minister of Finance, members of both Houses of Parliament, members of the Central Bank Board, members of the Board of the Central Bank, senior government officials, members of the Monetary Policy Consultative Committee, leadership of commercial banks and non-bank financial institutions, Central Bank management and staff, captains of industry, distinguished guests, ladies and gentlemen, good morning. It is indeed my honor to present to you this year's governor's annual monetary policy statement under the theme, "In Pursuit of Prudent Monetary Policy in Times of Uncertainty Due to Global Trade Disruptions." Distinguished ladies and gentlemen, the year 2024 and the first quarter of 2025 have seen the global economy battling with multiple challenges which have weighed down on growth, I will allude on these challenges later on in my address. Even though inflation has broadly moderated at different speeds across economies, risk persists, and interest rates have broadly moderated over the review period, but remain at restrictive levels. My address this morning shall outline some of the key global, regional, and domestic economic developments that influence the bank's monetary policy decisions over the past financial year. I will further provide insight on the short to medium-term inflation and monetary policy outlooks. Program Director, let me start by highlighting developments in the global economy. The IMF's World Economic Outlook, published in April 2025, estimates global growth at 3.3% for 2024, and it is projected to fall to 2.8% in 2025, before marginally recovering to 3% in 2026. The downgrades reflect in large part the direct impacts of the new trade measures and their indirect effects through trade linkage, spillovers, heightened uncertainty, and deteriorating sentiments. Program Director, ladies and gentlemen, you will notice that as I give the address, there shall be a couple of exhibits that are giving a narrative of what I am articulating. Advanced economies are estimated to grow at 1.8% in 2024 and projected to fall to 1.4% in 2025, before a marginal recovery of 1.5% in 2026. In emerging markets and developing economies, growth is estimated at 4.3% in 2024 and is projected to slow down to 3.7% in 2025 before recovering to 3.9% in 2026. The IMF has indicated that the growth impact of tariffs imposed by the United States in the short term varies across countries, depending on trade relationships, industry compositions, policy responses, and opportunities for trade diversification. The IMF forecasts global inflation to decline from 5.7% in 2024 to 4.3% in 2025, and further down to 3.6% in 2026. In advanced economies, inflation is projected to decline to 2.5% in 2025, from 2.6% in 2024, and edge lower to 2.3% in 2026. In emerging economies, inflation is expected to decelerate to 5.5% in 2025 from 7.7% in 2024, and further down to 4.6% in 2026. Global monetary policy conditions depict mixed trajectories in both advanced economies and emerging economies. Advanced economies like the US and the Eurozone saw a shift towards easing monetary policy as inflation began to cool down. Emerging economies, while facing inflation pressures, continue to grapple with high rates and more cautious approaches, reflecting the varied challenges they face. The IMF expects monetary policy conditions to continue easing. However, the heightened global economic uncertainty could stall the easing path as it poses upside risks to the inflation outlook. Ladies and gentlemen, let me turn now to the economic developments in our neighboring South Africa, which is Eswatini's major trading partner. South Africa's GDP grew by 0.6% in 2024, the slowest growth rate since 2020, following a revised 0.7% increase in 2023, underpinned by negative contributions from the manufacturing, construction, and mining sectors. The South African Reserve Bank forecasts GDP to grow by 1.7% in 2025 from 0.6% in 2024 and to increase to 1.8% and 2% in 2026 and 2027 respectively. South Africa's inflation rate marginally increased to 2.8% in April 2025 from 2.7% in March 2025 and remained below the lower bound of the SARB's 3 to 6% target range. Over the review period, the SARB decreased the repo rate by a cumulative 75 basis points from 8.25% to 7.5% by March 2025, citing an improved inflation outlook. The SARB forecast inflation to moderate to 3.6% in 2025 and to increase to 4.5% in 2026. Risks to the forecast are on both the upsides and the downside, with the balance of risks in the medium term skewed towards the upside. Program Director, let me now shift focus to developments in the domestic economy. I will start by outlining the monetary policy stance adopted by the bank during the review period. The bank pursued an accommodative monetary policy stance over the financial year 2024-2025, reducing the discount rate by a cumulative 50 basis points. The bank reduced the discount rate by 25 basis points to 7.25% in September 2025 and another 25 basis points to 7% in November 2024. This stance was broadly in line with the easing of global and regional monetary policy conditions, the lower domestic inflation outcomes, and the improved inflation outlook for the domestic economy. The bank maintained the discount rate at 7% in its January and March meeting of 2025, in line with prevailing domestic macro conditions and the increased economic policy uncertainty at global level. Distinguished guests, on the domestic economy, preliminary estimates indicate that Eswatini's real GDP growth slowed to 2.6% in 2024, down from a revised provisional estimate of 3.4% in 2023. The deceleration was largely driven by a significant slowdown in the tertiary sector, which is estimated to have grown by only 1.2% in 2024, compared to 6.5% in the previous year. GDP is projected to improve to 7.9% in 2025 before moderating to 5% in 2026 and 3.3% in 2027. The forecasted strong performance in 2025 will be driven by the commencement and acceleration in the implementation of large-scale public and private sector projects, particularly in dam construction and major energy-related projects. Risks to the projected growth outlook include ongoing geopolitical tensions, trade disputes, primarily involving the US and its trading partners, which could heighten uncertainty, disrupt global supply chains, and further strain already fragile trade relationships. Moreover, unforeseen delays in the execution of both the public and the private sector-led initiatives could further undermine growth momentum. I will now turn to inflation developments. Consumer price inflation moderated significantly from an average of 4.7% in 2023-24 financial year to an average of 3.9% in the financial year 2024-25. Inflationary pressures were broadly subdued during the 2024-25 financial year, driven by softening of supply-side inflation, particularly due to stable food and fuel prices globally and regionally, which led to lower imported inflation. Exchange rate movements were also generally favorable during the period under review. Eswatini inflation rate decreased to 3.3% in April 2025 from 3.8% in March 2025. Ladies and gentlemen, I will now talk about monetary sector developments in the domestic economy. In 2024, credit extended to the private sector continued to rise, largely underpinned by positive outlook activity. Private sector credit grew at an average mostly by credit to the business sector, which registered a year-on-year average growth of 11.5% in 2024, down from a 15% in the previous year. Credit to the household sector registered an average growth of 5.4% in 2024, up from 3.8% in 2023. The improvement in household credit growth partly reflected gradual recovery as consumer finances stabilized, supported by rising real incomes and the slightly lower borrowing costs. In the first quarter of 2025, private sector credit accelerated further, reflecting a year-on-year growth of 10.8% at the end of March 2025. The increase continued to be driven largely by the business sector, which recorded a robust year-on-year growth of 18.3% at the end of March 2025. Credit to the household sector grew by 3.8% year-on-year in March amid subdued credit demand. In the short to medium term, private sector credit growth is likely to remain positive, supported by sustained economic expansion and increased credit demand from the agriculture sector, driven by favorable weather conditions. However, credit growth may be constrained by uncertainties in global economic prospects, particularly following the introduction of new tariffs by the United States. At the end of December 2024, gross official reserves amounted to 10.1 billion, notably higher than the 8.8 billion recorded in December 2023. At this level, the reserves were sufficient to cover 2.4 months of imports, down from the 2.6 months despite the increase in reserves, primarily due to a rapid rise in imports during the review period. In the first 4 months of 2025, the reserves continue to rise, largely bolstered by the inflow of quarterly SACCO receipts in January and in April 2025. As of last week, Friday, 16 May 2025, the reserves were at 10.03 billion and sufficient to cover 2.3 months of imports. In the short term to medium term, the reserves position is anticipated to decline, largely due to a 20.4% reduction in SACCO receipts projected for the financial year or fiscal year 2025-2026. I will now turn to developments in the fiscal sector. As at 31st March 2025, total public debt stood at 36.1 billion, an equivalent of 37.8% of GDP, reflecting a growth of 5.1% on a yearly basis. The growth was attributable to both domestic and external debt, which grew by 6.2% and 3.7% respectively. The increase in domestic debt was mainly underpinned by the continued issuance of domestic debt instruments such as treasury bills, treasury bonds, as well as the central bank's advance to government. External debt was driven by disbursements made on ongoing project loans sourced from international financiers. I will now turn to developments in financial markets. The central bank actively participates in the domestic foreign exchange market and acquires foreign currency export proceeds from local banks, as part of the strategic initiative to build reserves and provide liquidity buffer against effects of net capital flows. The total volume of trades conducted during the financial year 2024-25 amounted to 6.81 billion, with unmatured forward positions at the end of the year totaling 333 million. The US dollar is the predominant trading currency, accounting for 5.47 billion of the overall purchases. As a means of supporting the government to meet her financial obligations, the bank continued to provide advances to government, and this facility was accessed in different tranches as and when needed. The bank also raised funding from the Johannesburg Stock Exchange to the tune of 400 million rands following a successful listing of a 4 billion program. Ladies and gentlemen, allow me now to turn to developments in the external sector. Preliminary data shows that the current account in 2024 posted a surplus amounting to 1.202 billion after a surplus of 1.849 billion in 2023. The surplus in the current account is attributable to a positive trade balance that more than doubled from the previous year as the country's merchandise exports grew faster than imports. Additionally, the surplus was buoyed by an improved positive secondary income account balance, which grew by 23.7% from the previous year, driven by an increase in the volume of SACU inflows. In the year ended December 2024, the external value of the rand lilangeni slightly appreciated against the US dollar and the euro, but depreciated against the pound sterling. Compared to its value in 2023, the lilangeni gained 0.7% to average 18.31 against the US dollar. The appreciation in the domestic currency was largely due to a mixture of global and regional factors, which led to capital inflows into South Africa. The first quarter of 2025 was marked by a mild depreciation, which generally saw the rand lilangeni recording an average of 18.51 to the US dollar, down from 17.88 recorded in the fourth quarter of 2024. Looking ahead, the rand lilangeni will remain volatile in the short-medium term, sensitive to global and the South African economic factors. Distinguished ladies and gentlemen, allow me now to talk about inflation and monetary policy outlooks. The bank has revised down its short to medium term inflation forecasts. Downside pressures to the short-term inflation outlook are expected to come mainly from the lower South African inflation outlook, which remains muted when compared to the previous period. Whilst there are inflationary pressures coming mainly from higher crude oil prices and a weaker exchange rate, overall domestic food inflation outlook outweighs the outward pressures. In the medium term, oil prices are expected to moderate gradually, coupled with an appreciation in the exchange rate. In March 2025, the bank revised down its inflation outlook to 4.88% from 5.25% for 2025, 4.54% from 4.8% for 2026, and 4.3% from 4.57% for 2027. Over the short term to medium term, the bank will continue with its mandate of ensuring low and stable inflation. To achieve that, the bank is likely to maintain the accommodative monetary policy stance before gradually tightening its considered tightening it. Through this, we will use and we will use our data to inform the decision. Despite the current moderation in prices, upside risks to the inflation outlook remain elevated, emanating from expected changes in administered prices, affecting fuel prices, ongoing trade policy uncertainties, as well as the persistent weak exchange rate. I'll now turn to bank supervision. The health of the domestic banking sector remains robust, as evidenced by sufficient capital buffers through having recorded a marginal decline from the previous year. Both the industry's capital adequacy ratio and common equity tier 1 ratio recorded a slight decline in the last quarter of 2024-25. Capital adequacy ratio declined to 17.41%, but remained above the regulatory minimum of 8%. CET1 ratio fell to 15.44% compared from the 16.25%, but still exceeding the minimum requirement of 4.5%. The Eswatini banking sector's total assets grew by 11.5% between March 2024 and March 2025, from 28.2 billion to 31.4 billion, while deposits within the banking sector grew by 12.8% during the same period, from 19.4 billion to 21.9 billion in March 2025. Deposits, which are considered the common funding source, continue to account for a large portion of the bank's loan portfolios, with the loans to deposit ratio sitting at 84.4% as of March 2025 from 83.5% in March 2024. The assessment of asset quality revealed a marginal worsening position, with non-performing loans exhibiting a slight uptick from 7.1% recorded in March 2024 to 7.2% in March 2025. The domestic banking sector witnessed reduced profitability advancements in the year under review, with industry after-tax profits decreasing by 2.4% year-on-year to 142.5 million compared to the previous year's 147.1 million. The liquidity status within the banking sector exhibited resilience, remaining above the minimum statutory liquidity ratio set at 22.0% for commercial banks and 20.5% for development and savings banks. As of March 2025, the industry's liquidity ratio stood at 32.9% compared to 33.4% recorded in March 2024. I will now turn to policy, conduct, and enforcement. The bank issued the cloud computing guidelines to the industry for use and came into force in 1st July 2024. This guideline provides guidance to financial institutions to engage in cloud computing services. The bank received 3 banking license applications for consideration during 2024-25 period. These applications show positive response to the bank's current proactive strategy to open up the banking industry and create a wider scope for more banks to set up operations in Eswatini. The bank completed baseline inspections for the domestic banking ecosystem. Significant progress has been made by the sector players in addressing the identified deficiencies. We applaud our banking sector for the strides made in addressing the inspection findings. On the other hand, the Consumer Credit Regulations Working Group, comprising of the CBE, FSRA, and Center for Financial Inclusion, working under the auspices of the World Bank Group, have concluded the drafting of the Consumer Credit Regulations. These draft regulations are aimed at formulating a guiding framework to conduct a thorough affordability assessment, prevent reckless lending and over-indebtedness, promote responsible lending, reduce NPLs portfolios, enhance access to credit, and ensure financial stability. I will now speak on the national payment system. In collaboration with the Ministry of Finance and the Eswatini payments industry, the central bank finalized the drafting of regulations to operationalize the National Payment Systems Act 2023. The draft regulations were submitted to the Ministry of Finance for the standard promulgation process with the aim of establishing them as legitimate secondary legislation. The Central Bank of Eswatini issued a directive to payment service providers routing low-value cross-border electronic funds transfer transactions and receiving cross-border electronic funds transfer transactions from the common monetary area. The central bank directed that with effect from 31st March 2027, all payment service providers that are presently routing low-value cross-border electronic funds transfers within the CMA through the SADC RTGS, real-time gross settlement system, should finalize the process to migrate all offshore low-value cross-border electronic funds transfers within the CMA to a regional low-value payment system. The objective is to regularize the execution of these transactions through an appropriate retail payment system designed to low-value cross-border electronic funds transfers and direct payment service providers to ensure that the execution of these funds transferred to and from the CMA does not have a negative effect on the transparency, efficiency, and cost-effectiveness of payments to consumers and businesses. The central bank continued to implement a Eswatini payment switch project featuring fast payments, open banking, card-based point of sale, and card-based automated teller machine modules. The EPS facilitates near real-time payments in its first phase. It will introduce third-party service providers in the second phase, followed by domestic card-based transactions, switching in the final two phases. As part of the phased implementation, the fast payment modules went live in December 2024 with 3 out of 8 participants. The 4th and the 5th participants joined in February and March 2025, respectively. However, due to challenges such as misalignment in technical standards and delays in vendor resources, the delivery has been slower than anticipated. Therefore, the last 3 participants are finalizing the testing of the fast payment modules of the EPS, and the last participant is expected to go live by end of June 2025. Program Director, allow me now to talk about the financial technology developments, the fintech space. The bank continues to build its technical capacity around the central bank digital currency through its ongoing participation in Project Sunbird, a collaborative initiative among the CMA central banks exploring cross-border applications of the CBDC. The bank has continued to operate the regulatory sandbox as a framework for testing innovative financial products and services under a controlled regulatory environment. The bank continued to research and monitor developments in crypto assets during the 2024-25 financial year. The ongoing monitoring reveals sustained and growing interest from Eswatini in crypto asset investments, primarily through service providers based in neighboring countries. The CBE recognizes the importance of maintaining appropriate oversight of this emerging sector, particularly given that crypto assets remain unregulated in Eswatini. The global crypto asset landscape continues to evolve, with many jurisdictions implementing regulatory frameworks. I will now turn to developments in our development finance unit. The bank, in collaboration with participating financial institutions, is currently reviewing its existing participation agreements and related guidelines for the small-scale enterprise loan guarantee scheme. This is meant to cover existing operational gaps, expand the scope of the scheme, and enhance alignment of the rules with the revised Eswatini National Policy for MSMEs 2024-2029. During the year ended 31 March 2025, this scheme issued a total of 146 new guarantees valued at 35 million, covering loans amounting to 40.2 million from various participating financial institutions, contributing to a 15.9% increase over the year. Program Director, ladies and gentlemen, I'll now move to financial surveillance. The CBE remains committed to safeguarding the integrity and soundness of the financial sector through its robust anti-money laundering, counter-financing of terrorism, and proliferation financing framework. This is done through effectively executing the risk-based approach to supervision of the financial sector, continuous improvements in supervision, legislation, collaboration, and capacity building to ensure alignment with international standards. In response to the 2022 mutual evaluation conducted by ESAMLAC, the Central Bank has contributed to the strengthening of the ML-CFT regime of the Kingdom of Eswatini. The bank, together with other national stakeholders, supported the Ministry of Finance in drafting and promulgating the Anti-Money Laundering, Counter-Financing of Terrorism, and Proliferation Financing Miscellaneous Amendments Act 2024, which enhances the legal framework and strengthens compliance with the Financial Action Task Force 40 recommendations. I will now move to speak about operational issues at the Central Bank. During the period ending 31 March 2024, banknotes issued amounted to 6.6 billion from the 6.8 billion issued in the previous year. Coins issued over the period amounted to 53 million, indicating an increase from the 38 million reported in the prior year. At the end of March 2025, currency in circulation was at 1.482 billion, indicating a 10.2% increase from the 1.345 billion reported in the previous year. The bank issued a 50 Emalangeni circulating commemorative banknote and a 50E non-circulating commemorative coin in commemoration of its 50th anniversary. The commemorative banknote and the coin were unveiled by His Majesty the King on the 10th of May 2024 during the bank's Jubilee celebration. This banknote and coin serve as a tribute to Eswatini's journey of transformation and progress, while celebrating the rich heritage and future aspirations of the country. The 50 commemorative banknote was released into circulation on 1st September 2024. The bank has been recognized for 3 international awards during the financial year, 2 awards by the International Association of Currency Affairs, and the 3rd from High Security Printing Renaissance. These awards underscore the bank's vision of being a center of excellence and a central bank of reference. The bank has reprinted E20 and E10 banknotes to be released in circulation in the first quarter of financial year 2025-26. Some of the changes on the banknotes include the country's name change from Swaziland to Eswatini, the Swati narrative on the obverse, the incorporation of the governor's name and signature, Philemon Fana Mnisi. Oh, is that the governor? And an enhanced security threat. The bank has noted a decline in discovery of uncontrolled die-stand banknotes resulting from ATM bombings. However, the public is reminded that die-stained banknotes are presumed to be proceeds of crime, and as such, notes should be reported to the central bank or the nearest police station. Program Director, allow me now to make some remarks on the financial stability. The financial system in Eswatini remained broadly stable and resilient over the past year, benefiting from improving global and domestic conditions. Eased inflationary pressures and a slowdown in global interest rate hikes provided relief to financial institutions, while domestic efforts to strengthen regulation and supervision further supported financial system stability. Externally, reduced load shedding in South Africa and a more stable political environment positively influenced Eswatini, despite ongoing concerns around sovereign debt and currency volatility. Domestically, financial conditions improved and fiscal pressures eased slightly due to a stronger government revenues. However, high public debt, the nexus with the financial sector, particularly banks, and increasing spending commitments remain a key risk. Household debt levels moderated in relation to disposable income, reflecting increased income. However, unsecured lending remains a concern. The corporate sector continues to face stress from declining profitability and high leverage, particularly the SMEs. Non-bank financial institutions continue to expand their influence in the financial system. However, risk persists due to sector-specific exposures, including concentration in the pensions and insurance sectors, and the high level of unsecured lending by credit financial institutions and savings and credit cooperative societies. The bank has finalized the Deposit Protection Fund implementation framework, which is critical for enhancing public confidence and safeguarding depositors, particularly in the event of bank failures. The Deposit Protection Fund is designed to protect depositors by providing limited compensation in the event of a bank failure, thereby promoting public confidence and financial stability, financial system stability. With the implementation framework now finalized, initial steps towards the full authorization of the fund will commence in the current financial year 2025-26, making a key milestone in strengthening Eswatini's financial safety net. Program Director, distinguished guests, as I conclude, let me emphasize the following. The year 2024 presented multiple challenges at global and regional level, some of which have been carried over to the current year. The global environment remains highly fluid, with heightened economic uncertainty, which is expected to weigh on global and regional growth, and by extension, have a spillover effect on the domestic economy. Domestically, inflation remains moderate, and the outlook points to a moderation. However, risks to the inflation outlook persists, and these include global and regional economic uncertainties due to the US trade policies and geopolitical conflicts, administered prices, and a weaker exchange rate, among others. The bank will continue to monitor developments at global, regional, and domestic level, and will use all the instruments it has at its disposal, optimizing its independence and using the law at its disposal in pursuit of its price and financial stability objective, addressing systemic risk in order to ensure that there is a conducive environment for growth and sustainability in the Kingdom of Eswatini. Finally, ladies and gentlemen, I would like to extend my sincere thanks and appreciation to the Minister of Finance, the Portfolio Finance Committee, and all relevant stakeholders, the officials at the Ministry of Finance, the bank's board of directors, members of the MPCC, financial institutions here present, both banks and non-banks, all staff of the bank, as well as other key stakeholders for their cooperation, commitment, and dedication to the attainment of price and financial stability that is conducive to the economic growth and development of the Kingdom of Eswatini. I have got no doubt that I can continue to rely on you for unwavering support and dedication in the execution of our mandate in the interest of all Emaswati. I thank you all, ladies and gentlemen. Good morning.
All right, so that was the Governor's address, Dr. Phil Mnisi, at his annual monetary policy. A key takeaway from the Governor's statement lies in the downward revision of inflation expectations across the forecast horizon. As of March 2025, the central bank now sees inflation averaging 4.88% this year, down from 5.25 projected in January. The same trend continues into 2026 and 2027, with forecast trimmed from 4.80 to 4.54% and from 4.57% to 4.3% respectively. That is what I took away from this speech, Sfiso.
Yeah, I think we ought to also tell the viewer what those figures could really mean. And I suppose what they mean, just generally, if we really just drill into what they mean, is that greater confidence in inflation containment efforts have been bolstered, but also they've been driven by tighter monetary policy, which is great, easing supply chain pressures. We see that they are really trying to make some interventions there, as well as a more stable regional environment. I mean, we've been having conversations with our economist, analyst Bia, on our market view every day, and he's been really emphasizing the key issue around the imperative of easing supply chain pressures, as well as a more stable regional environment. But it also speaks to a delicate balancing act, which is around anchoring inflation without choking off growth. I think that is very important. But for consumers, there's a sign of possible relief on the cost of living, which is great, as well as investors and policymakers. For them, it's a subtle nudge toward cautious optimism. So at least this monetary statement is an address on optimism.
Yeah. All right. We go back to business journalist Nelsiwe Ntangamandla Nelly. Right back to you. What is happening at this moment? We just heard the Governor's address on the monetary policy. What do you have for us?
Right. While Nelsiwe is still trying to sort out her laundry on her end, the key takeaway from the numbers that Lulu has done a good job in deciphering for us is just that, we are optimistic. There's going to be an easing on inflationary pressures. Of course, that is the trajectory, as well as the anticipation that the governor has pronounced this morning. But what makes us happy as consumers, myself and you at home, is that there will be an easing of possible relief on the cost of living. But also for our policymakers, we know that that the Ministry of Finance is listening attentively on what is going on. So we are seeing that subtle nudge on optimism. So we are hoping for, that
I think the other broader questions too, Mguni, such as what tools will the central bank deploy to deepen access to credit, especially for small businesses, and how will this policy framework align with the fiscal efforts to drive growth and employment, and can we build an economy that's not only stable but also inclusive and future ready? Yeah, crossing back over to Nelsiwe Nglamandla. What do you have for us, Nelly?
Thank you so much, Lungelele. As the governor has already delivered his annual monetary address, we are now joined by the CEO of Business Eswatini, Inathi Dlamini, who will tell us more about his take-home from this statement of the governor. Good morning, Nkosi. Briefly tell us your take-home from this monetary policy address.
First of all, it's so good to be here, listening to this fantastic report by the governor. I think he is in his element today, as you can tell. And I think he's on point on almost all the pillars of the economy. I think, first of all, he gave us a very, very good picture of the global environment, of the regional environment. And then he came down to give us a picture of the economy of the Kingdom of Eswatini. He is on fire, as you can tell, and it's because maybe not all is doom and gloom, despite the developments which are concerning us around the world, as you are well aware, particularly on trade. He gave a good picture of where the economy is, where inflation is tamed, but with some modicum of worries about it going up at some point in time, but we are hoping not. GDP figures continue not to be subdued as in previous years. If anything, we see a nominal improvement in those GDP figures. Inflation, which is very, very important. And inflation is one of the key things because it just causes poverty and erodes the purchasing power of our money. It seems to be in check so far, and barring unforeseen circumstances coming our way, we should be staying pretty until probably the next year. So the picture he has painted about the Kingdom of Eswatini, if I can sum it, is that there is hope.
The governor has also spoken about the total public debt standing at 36.1 billion emalangeni. What does that say about our economy? Are we in good standing, CEO?
I think we have to be careful about this, by the way, before I even answer that. Because someone who's not from this country and looks at our figures, percentage of debt as a percentage of GDP, they always say, oh, wow, how did you get to do that? Because if you look at SADC, I think we are one of the top 3 countries that are not heavily indebted. But I won't say that out loud, because out there they will say, government, why don't you go and borrow more, when we shouldn't. And I'll tell you, the problem is that we're a small economy. And yes, the Minister of Finance has done an incredible job in ensuring that our debt to GDP is contained or doesn't exceed 40%, even though we think if the minister continues to borrow, as he will for sure, it just may get to 41%. But he is saying, in order to avoid that, he needs to grow the economy. And by growing the economy, automatically that percentage actually goes down, because we want, the most ideal you can have is 35%. And now it's talking about 38, 39. We want to keep it there as a country. It's good fiscal management. That's why our credit rating was improved last year, because of that good stewardship over public funds. And I would continue to challenge the Minister of Finance, who's inside as we speak, to say, please, borrow responsibly, but also to say thank you, because some of the money he has borrowed is to pay debts, suppliers, and the suppliers are my people. So that's very good. So we have a lot of things that are going well for us, but I don't know where the ball will land, but I'm just hopeful.
So the governor has also spoken about the GDP being projected to improve to 7.9%. So as a country, where are we heading in terms of our economy? We are seeing that Eswatini is really performing at its best in terms of the economy.
I'm telling you, to be honest with you, this country, since last year, for one reason or the other, I don't know what, we've been just punching above our weight class. For some reason. I mean, we've been bobbing and moving and punching above our weight class. And yes, the projections for GDP growth are actually it's even more than 7.9, others are say 8.3. That's a huge number. But the World Bank says, maybe the conservative figure, it should be 5.5. But even 5.5 is considered good in the region when South Africa is talking about 1.5%. There is something going on here in this country. The projects, the massive projects in the pipeline, if they come to being, all of them, we just might hit the 7.9%. And if that happens, that is a game changer for us. Because by hitting that, it means more jobs will be created, fiscal management will be in check, things become possible which weren't possible last year. So we have every reason to look forward to the future with hope and anticipation.
The reserves, the governor also touched on the reserves. At some point they were at 36, the reserves were below 3 months. So what happens then? Why is it important that the reserves at least be at 3 months? And you sit in the monetary policy committee. So what is it that you are doing to ensure that we have our reserves at least at 3 months?
That is a very, very good question. I'm glad that you pick it up. Why is the 3 months the magic figure around the world? So ensure that your forex reserves at the barest minimum are 3 months. Let me explain, just for the sake of our viewers now. Remember this. This essentially means, let's say everything in this country were to shut down, no money coming in. It means with 3 months reserve, we can continue to buy things, the fuel, this foreign currency, which means the country can still survive for 3 months. If you have it at 4 months, it means we can survive for 4 months. If it's at 6 months. So it's good fiscal management that we maintain as more reserves in the country, which means the foreign direct investors who come in here, who sell outside, we continue to encourage them. Please bring back the foreign currency so it can go to the central bank. We then give you local currency. We need forex reserves. And every once in a while, they dip below the 3 months, and we're always concerned, but they always bounce up again. But we need something around 4 months, to be honest with you. That, as the governor said, it dipped a little bit. We shouldn't be alarmed. We think they will bounce back again.
Thank you so much, CEO. That was the CEO of Business Eswatini. Business Eswatini contributes about 92% of the private sector GDP, and they are saying that the speech by the governor has given them hope that the economy of the country will grow, and they are saying that Eswatini is in good standing, and that is why investors are so confident that investing in Eswatini is the best decision. Don't forget, viewer at home, to watch Market View today at 2 p.m. for more insights on the governor's address and more reactions from industry leaders. Back to you, Lulu and Sfiso.
Right, well, that was Nelsiwe Ndlamandla, our business journalist, there in conversation with Inati of Business Eswatini. Really, really important questions that she extended to him, and he really did answer them very carefully, very careful answers and very straight to the point. But indeed, that was the governor's outlook, carefully worded, deliberately cautious, and full of implications. One clear takeaway: macroeconomic stability remains the bedrock of this monetary policy, and that means continuing the fight against inflation while still supporting a fragile economic recovery. And indeed, he did speak on inflation taking that downward trajectory, which is good for your pockets.
That's right. Thank you for tuning in. This was a special broadcast of Market View. Get the full dose of Market View this afternoon at 2 p.m. We'll see you later at 2 p.m. Enjoy the rest of your day.
When you choose your adventures, you do so with an open heart and a desire for the unexpected. You embark on journeys to discover new worlds, full of wonder. You choose a path to awaken your senses, to feel the rush of life overwhelm you, a world to make you look up and realize just how inspiring this life can be. You ask, and we give you the royal experience. Arrive and awaken your heart. Explore life in ways only thought possible in your dreams. There are but a few places on earth so special, so unique, and so spectacular, where it becomes the rite of passage for the